and it's such a big market too. So it's
Huge.
there's a lot of neat little nooks and crannies in the bond market that are actually really cool and worth checking out. Way better than the ag as an index,
Yeah.
even the treasuries. There's some
Well,
really
and the typical investor, I mean, if you ask them what's the bigger market, the
yeah
equity market or the bond market, well, probably the equity, right? Because that's all
yeah
you hear on the news. But
right
it's a lot smaller than the bond market.
right. So in your allocations, do you lean more into the bond side because I mean you seem to be aware of all the great things that you can do there. Some people aren't. Many advisors have no idea. I think they buy the ag and like that. There's my diversification. Um,
Yeah, well, I mean, really, when it comes to like individual clients, I mean, we still, depending on the client, risk tolerance. I mean, obviously, we utilize equities and are going to
sure.
have a good exposure to that just for that growth. But yeah, for somebody who's very conservative, I mean, we're pretty heavy into the bond side of it and tactical, especially if they're retired. I mean, we're going to be pretty heavy tactical
Mhm.
and probably bonds and use a kind of a mix of bonds to get a little bit of diversification in there.
Sure.
But yeah, certainly.
Yeah. Well, there are some like you mentioned, emerging market bonds, I think.
Yep. And probably bonds and use a kind of a mix of bonds to get a little bit of diversification in there.
Sure.
But yeah, certainly.
Yeah. Well, there are some like you mentioned, emerging market bonds, I think.
Yep.
You can equity like returns for these low risk things. It's wild. I mean,
Yeah.
you trade them, they really trade pretty well. Um,
Yeah. No, absolutely. I mean, the risk adjusted return is
mhm.
and that's what you want, right? You want a really
Right.
high risk adjusted return, and that provides you that. And it's again the fact that bonds aren't always talk about how they, when they correct, it's more of a, it's a slow roll versus a peak, up and
Right.
down, like an equity. And so it just gives you time to react,
Mhm.
without getting killed.
Right.
So yeah, I really like the bonds and I think they fit really well for, the right risk tolerance and the right
Mhm.
client.